The basic rule for business planning is to accelerate all the expenses that I could possibly do in this year. I prepay as much as possible, maybe some bonuses that might be given. I might prepay health insurance to the employees. I might prepay some advertising expenses. I might stock up on inventory and supplies and deduct those as much as I can. And then if somebody owes us money, I like to say, don't pay me until the beginning of my fiscal year. Anytime we can defer income to next year and accelerate the expenses and maximize deductions, those are the keys to reducing your business taxes. Now this year, in anticipation of higher taxes next year, that throws this whole thing for a loop. And it maybe I really don't, maybe I want to maybe this is backwards. Maybe I want to defer all the expenses to next year when I think the taxes are going to be higher, and I want to accelerate my income. It's called tax planning, and depending on the business structure that you have, whether you're a sole proprietorship, whether you're an S Corp, a C Corp, a partnership, whatever you are, what is your fiscal year? This is where tax planning becomes, you have to be a little bit creative and take advantage of the tax code. The IRS says, or at least the Congress says, you can organize your taxes in the most advantageous way for you. There's nothing wrong with that. It's simply tax planning for your best benefit. Now, other than we're anticipating higher taxes, this is the general rule, and of course there's exceptions to every rule in taxation, and so I can just give you that. Medical expenses. If you have a business of any kind, whether that's a sole proprietorship, S Corp, C Corp, partnership, you can almost always deduct your medical premiums that you as an owner pay. Now, if I had a C corporation somewhere in the mix, then all of a sudden those rules change, and now I can deduct deductibles, co-payments, premiums, prescriptions, herb supplements, mileage to and from the doctor, the dentist, vision, dentistry. All of a sudden, all kinds of things are opened up to me if I have a medical reimbursement plan in a C corporation or an LLC taxed as a C corporation, and I've got the right language inside of that that's approved by Section 105 of the Internal Revenue Code. And so I'm not suggesting everyone in America have a C corporation, but that's something that we do, and it saved me lots and lots of money, especially when our kids were younger and we had a lot of medical expenses. If a C corporation doesn't make sense, at least be maximizing maybe a health savings account. Some of you, if you have a high deductible medical plan, having that health savings account is incredibly helpful on reducing your taxes. You get the tax deduction right now, and somewhere down the road you have to use that for medical expenses, but that may be years to come. This is like a little separate IRA, and what most people don't understand is now I could self-direct this, give this to a custodian and allow that to work real estate deals, or I could invest in the stock market, or there's other things you can do and self-direct this money. You don't have to simply rely on a custodian that gives you almost nothing in return.